Well, good afternoon and welcome everyone. I'm Callie Waterhouse of the Arizona Association of Realtors, and we are thrilled that you have decided to join us today for today's webinar, The 5 Myths Every Realtor Needs to Know About VA Loans with Jimmy Vercellino. Jimmy is one of the nation's top VA home loan mortgage originators. I believe he's in the top 1%, and a licensed and certified instructor with the ADRE. He teaches continuing education, and he owns his own school. He offers a class called All You Need to Know About VA Loans.
There you go.
So we'll definitely be talking to him a little bit more about that. Jimmy can also be heard from time to time on KKNT 960 AM, and he speaks to veterans about the home loan benefits that are available to them through the VA. And with all of that being said, welcome, Jimmy.
Well, thank you very much, Callie. Appreciate that kind and warm introduction, and happy Friday, everybody. And I think it's, well, I guess I should be careful saying that, right? Anytime you say happy Friday to a realtor, that's like saying happy Sunday night. But anyhow, I'll kind of move away from that here a little bit. Super excited to be with each and every single one of you today. The title of today's course, or presentation rather, is The 5 Myths Every Realtor Needs to Know About VA Loans. And so kind of getting started here, and we can just kind of cruise along. I'll just tell you a little bit about myself and where I come from. So that, yes, is me at the tender age of, gosh, I don't know how old I was there, maybe 4 or 5, but I'll put it to you this way. It was in the 80s. And if you ever meet me in person, I have a lot more hair back then than I do now. But anyway, I was born and raised in the San Francisco Bay Area. As you can see, destined for service. I am a United States Marine Corps veteran, and I was that young whippersnapper that walked into the Marine Corps recruiting office and said, "Hey, Master Guns, I don't care what you make me, just make me a Marine." So I'll never forget it. Master Gunnery Sergeant Ted Brown, a rather intimidating figure, huge biceps, looked at me and said, "Son, we've got the perfect job for you." I said, "What's that?" He said, "Infantry." I said, "What's infantry?" He said, "Don't worry about it. You'll find out when you get there." So anyhow, I found myself in the United States Marine Corps, traveled all around the world from the age of 18 to 22 years old, Singapore, Thailand, Australia a couple of times, Japan a couple of times, and last but not least, I am a veteran of Operation Iraqi Freedom, and that's something that I hold very near and dear to my heart. So moving forward, I ended up, well, I was stationed in Kaneohe Bay, Hawaii at the time, and I was out there doing what Marines do, right? What do? Well, we drink beer and we look for girls. I mean, it's just, you know, it's just the way it went. And that night was no exception when I met a young lady and I said, "Where are you from?" And she said, "I'm from Phoenix, Arizona." And I said, "Really? Is that anywhere close to Mesa? Because I'm thinking about moving out there when I get out of the Marine Corps." And she said, "Yeah, it's about 10 minutes. And so needless to say, I actually considered it, or I should say I was all ears at that point. Well, as fate would have it, I would follow that young lady out here, and I had this bright idea. You guys want to hear what it was? I decided that I was going to leave the Marine Corps infantry and get a start in the mortgage business. I mean, that goes hand in hand, right? I mean, after all, they both start with the letter M. So what I ended up doing was I walked up and down Camelback Road until I found a company that would take me in and train me straight off the street. And that's how I got started in the mortgage business. And during that time in 2005, I got to tell you, I didn't know what in the world I was doing. But here's what I did know. I did know that veterans were being told, and active duty service members for that matter, were being told things about our VA home loan benefits that were simply not true. So I'll never forget it. It was just like it was yesterday. In 2006, I was standing in a Big 5 Sporting Goods on the corner of Cactus and Tatum Road when I saw 2 active duty service members in uniform, and it was like a light bulb went off at that time. I walked up to them, thanked them for their service, told them that I specialized in VA loans. And guys, I was speaking by faith at the time, by the way, but I told them that I specialized in VA loans and that I would be honored to serve them. And since that day, I have devoted myself to the veteran and basically active duty home buyer across this great nation. So I'm going to make a couple of promises to you today. This is going to be one of the best AAR webinars that you have ever attended in your real estate career. And the reason why I say that is because I believe in the information that I'm sharing with you, and I know that it's valuable information. Okay, so I guess, you know, you have a Marine Corps instructor today or presenter today, so I think it's only fitting that we have a mission. Good to go? That we have a mission. And after all, today's mission is simply this. Here's the deal. I want you, the Realtor, on this webinar to obtain an understanding of VA loans. So let's just start with the basics. I want you to understand VA loans, okay? And in turn, I want you to be able to help veterans and active duty military purchase homes with the information that I share with you today. So again, simply stated, I want you to understand VA loans. The second part of this is that I want you to be able to help veterans and active duty military purchase homes as a direct result of the information that I'm about to share with you. And then I guess the third and final thing is that I want you to sell more homes because you heard this information from me today. One of my favorite authors, men of influence, left an amazing legacy, Zig Ziglar. He said this. He said that we can have anything that we want in life if we'll just help enough other people get what they want. So allow me to ask you today, what is it that our veterans want? Well, our veterans want information about our VA home loan benefits. They want to understand how it works. They want to know the ins and outs. Well, what is it that real estate agents want? Well, they want to know how it works as well, right? And in addition to that, you want to be able to sell more homes. So I recognize that, and I am going to provide you this valuable information that you are going to be able to take to the marketplace, okay? So having said all of that, let's keep moving forward here. And I always like to ask the question, what if asking one question, literally just one question, could be the difference between selling a home or not selling a home? And let me monetize that for a second. What if asking one question, and I'll show you this later, but what if asking one question could be the difference of a $21,000 commission or zero? That one question, if you're following along and you want to take a look at it here, is simply this. Are you a veteran? Are you a veteran? In other words, did you serve? So I know I can't see anybody today and everybody's listening, but I want you to just take a quick, raise your right hand and just repeat after me. Say, I am going to ask this question for the rest of my real estate career. Are you a veteran? Because here's the deal, team. There are a lot of veteran active duty service members walking around out there. There are a lot of veterans that have never used their VA home loans that think that they cannot use them again. So they're going to get into their car with you, or they're going to stop by one of your open houses, and they're never going to think to tell you that they are, a veteran. And by not only asking that question, are you a veteran, can help you, but it can also help them save thousands of dollars a year by not having to do things like pay private mortgage insurance, or not having to come in with a down payment requirement, or saving on a VA funding fee. So the opportunity here is truly limitless for the things that we can do by asking that one question, and we'll talk more about that today. So everybody on this call from here on out is going to incorporate that into their buyer consultation. And if you've been doing it, awesome. And if you haven't been doing it, well, that's okay too, because today, moving forward, we're going to be able to do that, okay? So if you've ever heard me on the radio before, I like to do one of these things called a VA loan rapid fire. So it'll sound something like this. Hoorah, warriors. This is Jimmy Vercellino, USMC vet, and your very own mortgage originator specializing in VA loans. Stand by for your VA loan rapid fire. And from there, what I do is I go into the specifics or the parameters of the VA loan, and I'll go on to say, your VA loan is the only 100% financing loan, no money down, up to $417,000 with no PMI. So if you're in the market to purchase or refinance a home, I want you to call me. I speak your language, and I know what it means to serve. So in a quick review, it's simply that. The VA loan is the only 100% financing loan today that a veteran can purchase a home anywhere in Arizona, up to $417,000 with no money down. Here's the deal, team. There is no other type of loan that will allow any of us to do that. USDA has geographical restrictions. USDA has income limits as well. The VA has neither one of those. So again, the opportunities are limitless, does not require a down payment, and once again, no private mortgage insurance. Kelly, I always do this comparison. I say if you took a $200,000 FHA loan and you stacked it up against the $200,000 VA loan, same interest rate, and you compared them over the two, the FHA loan would be $147 a month more expensive than a VA loan. And once again, and I'm sure many of us know that the changes, over the last couple of years with FHA, here's the deal. You have to pay that $147 a month for the life of the loan. So $147 a month times 30 years, you can see how this can end up costing the veteran a lot more money than they really need to pay. In other words, it's going to save them a heck of a lot of money, okay? So in its most basic sense, I want to explain what the VA loan is. If you're like me, you used to think, okay, well, hey, I'm going to go down to the Department of Veterans Affairs here, right down the street from where we're at right now, actually, here on Central, and you say, give me a VA loan for $417,000 to buy a house, right? And the guy behind the counter says, all right, no problem at all. Here's your check. Well, that's not really how VA loans work, okay? The VA loans simply work like this. They do not lend the money. So the lender would be lending you the money. So for example, I work for First Choice Loan Services. My mortgage company would lend the veteran the money up to $417,000 for no money down. So since I have Callie in the room here for me, I'll just use her as an example. And I'll say, okay, Callie, if you're my veteran and I lend you $417,000, remember that Jimmy Vercellino / First Choice is lending you the money. The VA has nothing to do with the transaction. Did you know that? The VA has nothing to do with the transaction. You might say, well, wait a second, why do they call it a VA loan? Well, VA does not lend the money. They just insure the VA loan. So again, if I gave you a $417,000 loan, the VA would sit on the sideline and they'd say, hey, Jimmy, in the event of Callie foreclosing on her loan, and we know this isn't going to happen, by the way. I'm just throwing it out there as an example. She whispered to me, thank you. But in the event of a foreclosure, the VA sends a check to the lender for 25% of the loan amount. And that's how VA loans work. They don't insure the money. They just guarantee the loan in the event that the veteran were to foreclose. Once again, the VA would cut a check to the lender. So watch what happens here. If you're looking at your slide right now, you see that I've used 25% of $417,000. Well, $104,250 is the maximum guarantee that the VA will insure in Maricopa County. So in other words, they're going to say, hey, Jimmy, we're not going to give you a 25% guarantee to your investment to Callie, only if she exceeds, well, let me repeat that. We're going to cap your guarantee to her at $104,250, which equates to a $417,000 loan amount. Does that make sense, everybody? So once again, 25% guarantee on the loan. The max guarantee for Maricopa County is $104,250. That's the maximum amount that the VA will guarantee in the loan, making a veteran eligible to take a loan up to $417,000 with no money down. Let me ask you guys a quick question here. Can you find a home for a veteran in Maricopa County for $417,000 with no money down? I know that I'm saying that with a little bit of tongue-in-cheek here, but I know our marketplace and I know the opportunity that exists for us here to serve these veterans and their families, and $417,000 will buy us a nice home here in Maricopa County. Okay, so here's the deal. The title of today's webinar is The 5 Myths That Every Veteran Needs to Know About. And I had a quick question come in. It was asked, is that county, or does the county loan limit change? And the answer is, here in Arizona, every county, whether it's Pima, Cochise, Yavapai, it's all $417,000. Good to go, team? Okay, so here's the deal. I always say this, that if you're serious about serving veterans and active duty military, you must be able to dispel the myths out there in conjunction with the VA loan, because here's the deal, team. There are a lot of them. There's the listing agent that never did a VA loan, or maybe did a VA loan back in 1980, calls you and says, you know, I'm not accepting this offer because the VA takes 90 days to close, or I had to go out and dig a ditch and do all of these repairs. Listen, guys, I'm here to tell you today that the VA has modernized itself. I don't know what it was like back in the early 70s, but I'm here to tell you what it's like today. Okay? So again, if we're going to serve veterans and active duty military, we must be able to dispel the myths, and that's exactly what we're going to do right now. Okay, so here's the deal. Myth number one, right? We've got to get it out there. We've got to talk about the 800-pound gorilla in the room, and that's that darn VA appraiser, right? That VA appraiser went out, inspected my property, gave me one of the worst appraisals that I have ever obtained in my entire real estate career. Let me say this about that, okay? You very well may have had a bad VA appraiser in your real estate career. And let me be very honest with you. I have too. Simple as that. But let me say this about that. If the VA appraisal process were as bad as everybody says it was, or people have told me over the years, simply stated, I wouldn't be in business. I would not be in business. Last year, I originated personally in personal VA production over $30 million worth of VA residential mortgages. That's a lot of VA appraisals, okay? So it's important to understand how that process works, and I'll briefly cover it. The VA appraisal process is probably one of the most misunderstood types of appraisals out there. So first and foremost, the VA appraiser is not an employee of the VA. It's not an employee of the VA. ABC or XYZ appraisal services go out there, they inspect the property. Typically, the VA appraisal process should take anywhere from 7 to 10 days, okay? Now, let's just paint a scenario here. They go out, they inspect the property, and they don't see that the value is there. What happens is they issue something called the Tidewater Notice. You want to know what the Tidewater Notice means? It means that there may not be sufficient comps that support the value of your home. So guess what? You get notified about that in advance. And so how beautiful is that, that you actually have the opportunity to fight for your value before it's even issued. There are no other types of appraisals, FHA or conventional, that will allow you to do that. Well, you might say, well, Jimmy, I never heard about this. Why am I just now hearing about this VA Tidewater Notice? And they just issued my appraiser or appraisal the last time around, and I didn't even get to fight for it. Well, here's the deal. Communication from the lender, this is where it's supposed to come from, which is exactly why you need to make sure that you're working with a lender that communicates with you during the VA loan appraisal process, because if you don't, that is exactly what can happen. So we could talk about the VA appraisal process for a very long time, but what I am here today to tell you is that it is not as bad as many people will say it is. And once again, you actually have the opportunity to lobby for your value up front before the appraisal is even issued. FHA does not allow you to do that, and conventional does not allow you to do that. So let's move on. One of the biggest misconceptions from the veteran standpoint is that the appraisal, the VA loan expires. So do you remember how I told you guys to ask that one question, are you a veteran? It's because one of the things that I've observed from veterans over the years is they'll think this, that, well, I never used my VA loan, so therefore it expires. Well, here's the deal. We oftentimes as veterans get that confused with the Montgomery GI Bill. Here's the deal, team. Totally two separate things. The Montgomery GI Bill does expire. That's for education benefits. The VA loan, however, never expires. I've helped out several World War II veterans, Korean War veterans, personally with their VA home loan, and these guys and gals thought that they could never take advantage of it, and that is simply not true. So you've got the retiree who comes into your open house, so that you know, who never thinks again to tell you, can I use my VA loan? And the answer is absolutely. Okay? In addition to that, these men and women that have so honorably defended our great nation think that maybe they used it once and they can't use it again. Okay, or maybe even they foreclosed on a VA loan, therefore they've lost their entitlement. That is not necessarily true. So a veteran can use a VA loan if they've never used it. A veteran can use a VA loan as many times as they would like. As many times as they would like. And I guess I'm getting ahead of myself here, but I'll give you guys a little sneak peek. The veteran can even have more than one VA loan at a time. That's going to be a really big marketing opportunity for you later that I'll share. But the veteran can even have more than one VA loan at a time. So this myth or this notion that the veteran's VA loan benefits expire is simply not true. Okay? So as we move along here, the VA loan, once again, never expires. Let's put that myth to bed. That's where it belongs. Now, the VA loan. So the veteran, and I guess I, again, gave it a little to you early here, but the veteran can actually have more than one VA loan at a time. Did you know that? The veteran can have more than one VA loan at a time. So here's the scenario that I like to pick, or excuse me, share. So let's just say that you have a vet, purchased a home, and I'm sure many of you sold homes to veterans on this call between 2010 and 2012, right? Veteran buys a home for $120,000. Since then, maybe he's gotten married, had a couple of kiddos, gotten a promotion at work, and now all of a sudden he calls you back and says, hey, you know, John, I want to purchase a home, more desirable location, better school district, bigger square footage, I'd like to buy a home with a pool, and I've got a VA loan on my house right now, so I can't do another VA loan because it's tied up, and gosh, I'd hate to sell the house at this time because I've got so much equity in there. It's just such a great home, and I want to increase my real estate portfolio. Well, guess what, John? Now you get to tell him that he can actually use another VA loan to purchase a home. How cool is that? So let me give you an example of how it works here. Myth number 3, once again, you can have more than one VA loan at a time. So if you think back to the beginning of the call here, you'll remember that the VA does not lend the money. They just insure the loan by 25%. So in the example that I've given you here today, let's just say we had a $120,000 purchase price. Okay, $120,000 purchase price. I multiply that by 25%. That means that the VA has guaranteed $30,000 worth of that loan. Now, if you remember, I said that everybody gets $104,250 in Maricopa County. Okay, everybody gets $104,250 in Maricopa County. Well, so if I take that $104,250 and I subtract out the $74,250, I'm left, or excuse me, the $30,000, I'm left over with $74,250. Everybody see that? So watch what I do now. I take that $74,250 and I multiply it by 4. Some of you might say, well, Jimmy, why are you multiplying it by 4? Well, because that represents 25% of the loan amount. So watch what happens now, you guys. I can get a new VA home loan, no money down, more desirable location, better school district, bigger square footage, with no money down, up to $297,000, and have a second VA loan. And some of you might be thinking, well, Jimmy, wait a second. The VA loan is a primary residence loan, and it absolutely is. And the veteran occupied that property for a reasonable amount of time. And the next question that I get is, well, Jimmy, define reasonable, right? Well, typically reasonable, in my, just humble opinion, would be 1 year. This isn't designed for the veteran that wants to buy an investment property and, take advantage of. This is for a veteran that has, again, wants to buy a new house, bigger square footage, more desirable location, whatever the case may be, and actually truly live in this property. Okay? So once again, you can have more than one VA loan at a time. And listen, guys, mortgage originators don't know this information. I would venture to say that some realtors on this call do not know that information. So allow me to ask you a question on this. How in the world can we expect our veterans to know this information? And the answer is they simply don't. Okay? One of my favorite quotes is that our income is directly related to the value that we provide the marketplace. Guys, this is valuable information. And once again, Veterans do not know this information until today, right? And so here's another thing that I'd like to do. Everybody raise your right hand again. Here we go. Say, I have homework, all right? So here's the homework, all right? This is an honor system deal situation, right? And nobody's going to come back and, check up on this, but write down about 4 or 5 veterans that you know and share some of this information with them. And I guarantee you that they will find it to be of value, and I guarantee you that it will lead to business in the future, okay? So write down about 3 to 4 veterans that you might know and take this information to them.
So, Jimmy, before you go on, can you explain that number 4 again? We've got a few people on the call today, and they're like, where did that come from?
The number 4, why we multiplied it by 4?
Yep.
Sure, absolutely. So the reason that I multiplied that number by 4 is because it represents 25%. So the 74,250 represents 25% of the maximum loan amount. So in other words, $297,000, 25% of that is 74,250. And that's what the VA is guaranteeing to the lender on the loan. Once again, in the event that the veteran were to foreclose, we would get a check for 25% of that loan amount. Does that make sense, everybody? All right. So if it doesn't, or if it does, by all means, we'll open it up for Q&A after this, right, Callie?
Yep.
And we can answer any other questions that you might have. All right. Clear to move forward?
Good to go.
Beautiful. Good to go, she said. I like that. That's a little acronym that we used in the Marine Corps. All right. So once again, I keep going back to this. And listen, guys, I'm excited about this information. And the reason why I say that is because if you ask that one question, are you a veteran? This can lead to some serious opportunity for you to sell some what I would call high-end homes. So VA myth number 4, the VA loan is capped at $417,000. Well, wait a second, Jimmy, you just told me that the veteran can only go up to $417,000 with no money down. Yes. That's exactly what I told you, $417,000 with no money down. So let me just stop there for a second. Do you know any veterans that are doctors? Do you know any veterans that are perhaps lawyers? Or let's just say business professionals or entrepreneurs that have done very well that would like to purchase a home maybe somewhere above $417,000 that never think or never thought to say, could I use my VA loan to buy a high-end home or a home above $417,000? And the answer is absolutely. So what if I told you that the VA loan is probably or is the most competitive jumbo loan that exists on the marketplace? Some of you are going, are you serious? There's a VA jumbo loan out there? And the answer is absolutely. Let me give you an idea of how it works, right? So we're just going to dispel that myth really quick. But here's an example, okay? So let's just say that a realtor on this call has a veteran that wants to purchase a home at $750,000, okay? Now remember, the VA, the maximum amount that they will guarantee in the loan is $104,250, all right? We all remember that, right? Now, watch what happens. The VA loan still has to be guaranteed by 25%. Okay, so watch what I do here. 25% of 750 is 187.5, right? I'm up at the top. So we know that the VA will insure 104,250. So I take that 25% number on the third line down of 187.5 and I subtract out the 104,250. Now I'm left over with $83,250. That, my friends, is what the down payment requirement would be on the VA loan. You see that? So what did we just do here? We just helped a veteran purchase a $750,000 home with an about 11% down payment, 30-year fixed rate mortgage, at somewhere in the low 3s with respect to rate. Obviously, rates change on a daily basis, right? So depending upon what's going on in the economy. But right now, with a veteran with credit scores in the, 7s, could expect to see something in the 3s, right? So here's the deal. 11% down payment, a rate in the mid 3s, one loan, 30-year fixed rate mortgage with no private mortgage insurance. Team, there are no other types of loans that are available on the marketplace that will allow a veteran to do that with that competitive of financing terms. So once again, what if asking one question, are you a veteran, could be the difference between selling a $750,000 home or nothing, because there's veteran doctors, lawyers, business professionals, entrepreneurs, veterans that have worked hard their entire lives and want to buy their dream home that never think to ask you when they get in the car, can I use my VA loan for a jumbo loan? Well, we just dispelled that myth. Can I get an amen or hallelujah, right? All right, so let's keep moving forward here. All right, and then the VA myth number 5, right, that the seller has to pay all of the fees. So I've been originating VA loans for nearly 10 plus years now, and one of the common gripes, if you will, that I get on a VA loan is that, Jimmy, in this competitive marketplace, I just can't get the VA the seller to accept our VA offer because, they have to pay for all of those fees, right? I got to pay for this and that and the other. Let me say something. Let me be very clear with everybody on this call. The veteran does not, let me repeat that. The seller does not have to pay for any, let me repeat, the seller does not have to pay for any fees in conjunction with the loan. In other words, the veteran can write a full price offer on your listing and not ask for 1 penny in seller concessions. I'd say, well, wait a second, Jimmy, what about on line 83 of the purchase contract? It reads, in the event of a VA loan, seller agrees to pay the escrow fee and up to blank of loan costs not to be permitted to be paid for by the veteran. Well, here's how it works. The VA says this: if the veteran is being charged a loan origination point. So Callie, think about that word for a second, loan origination point. That simply means that I would be charging you a 1 percentage point of the loan amount to originate your loan. What does originate mean? Well, to work on it, right? To do the application, the processing, the underwriting, the doc prep, the this, the that, that type of stuff. But what happens if I'm not charging you for that? Well, then I can charge you for those items. So let me repeat that. If I'm charging you a loan origination point, then I can't charge you the non-allowables because I would be double charging you, right? But if I am not charging you a loan origination point, well, then the veteran can pay for those non-allowables up to 1 percentage point of the loan amount. So let me give you an example. If a veteran were writing a offer on your listing at $300,000, the veteran could pay up to $3,000, 1% of the purchase price in non-allowables. So the next question is, well, how much are the non-allowables, right? Well, first of all, that's kind of a tricky word because technically speaking, there are no non-allowables on a VA loan, right? But if you're looking for a dollar figure to put on line 83 of the purchase contract, you can write in approximately $2,100 there. $2,100 there, okay? So having said all of that, I want you to know that AAR cares about you, and they know that this has been a very confusing and, dare I say, hot point for a lot of realtors in our community. And one of my good friends, dear friends, Jan Stewart here, and I have been discussing how to make this verbiage make sense for the listing agent. And I'm pleased to report that there is a very good possibility, and I don't want to speak before it's out, but AAR will be revising that portion of the purchase contract so that it no longer reads, in the event of a VA loan, seller agrees to pay escrow and up to blank. Now it's simply going to say something like seller agrees to pay up to blank percent of the purchase price or up to blank amount of dollars to be used towards buyer's loan costs, impounds, title and escrow costs, recording fees, and, if applicable, VA loan costs not to be permitted to be paid for by the buyer. Okay? So you might be saying, well, Jimmy, why would I not want to ask for the seller to pay for it? And listen, I'm going to high-five you right now if you think that you can ask for it and get it paid for by the seller. I want to help veterans out. I want to see veterans get into homes with little to no out-of-pocket expenses. But what I don't want to do is see a veteran lose out on an opportunity for a house and not get their contract accepted when they're willing and able to pay for the fees if they need to. Everybody with me on that? And then also keep in mind that there are programs available designed to assist veterans with closing costs in prepaid items in conjunction with the VA loan. For example, the VA loan Home in 5, right, where a veteran gets up to a 4 to 4.5% credit towards closing costs in prepaid items. Right now, we have a veteran that's literally getting all of their closing costs paid, all of their prepaid items paid, and buying out their VA funding fee, and is literally not walking into escrow or closing, with $1. I mean, that's pretty cool. That's pretty cool. And there are programs available out there for veterans, and of course they have to qualify for them and whatnot, but there are programs out there for them to do this. So once again, it is a myth that the seller has to pay for all of the fees. There are customary, now notice I used the word customary, that the seller will usually pick up, but that doesn't mean that the veteran has to pay for them, or cannot pay for them. Everybody with me on that? All right, so let's keep moving forward here. And one thing that I did want to mention, and once again, AAR cares about getting you out this valuable information, is that one of the things that was always understood that the seller had to pay was the pest inspection. Well, I'm here to tell you today, team, put out by the Department of Veterans Affairs, and it's always been like this, but until Jan, shook him up a little bit and actually got him to put it in writing, as of August 26th, or 16th? 16th, thank you. As of August 16th, the VA put it in writing that here in Arizona, the buyer, let me repeat that, the buyer can pay for the pest inspection. The buyer can pay for the pest inspection. That used to be that one item that everybody thought that the veteran could not pay. And that, my friends, is simply a myth. Okay? So, once again, my name is Jimmy Vercellino. I'm a mortgage originator specializing in VA loans. My contact information is there. 480-351-5904 is my direct line. You could always email me at jimmy@valoansforvets.com if you have more questions, or of course you could visit my website at valoansforvets.com. There's a lot of really good information on that site as it relates to VA home loans and serving veterans and active duty military. Callie, is it okay if I mention tomorrow? Okay. So one of the things that I'm very excited about is that I've created a VA loan app. And so if you're interested in more information about it, you can go to thevaloanapp.com. And tomorrow morning, I'm going to be making an appearance on Good Morning Arizona, and I'll be talking about the VA loan app and some of the things that you can do. So the VA loan app is a free app designed to assist veterans by asking a few questions, basic questions on their service. And from there, they'll be able to find out through those series of questions whether or not they're eligible for the VA loan and qualified to take advantage of those savings that the VA loan affords us as veterans. Okay, so I hope you found this information to be of value today. I hope that you can take it to the marketplace, serve more veterans and active duty military as a direct result, and kind of just end with this and say that just keeping in mind that we can have anything that we want in life if we'll just help enough other people get what they want. And I can tell you, Realtors, that veterans are craving information on how it relates to our VA home loan benefits. All right.
All right, Jimmy, we have a ton of questions. First question being, is your app Arizona specific?
No, it is not. Nationwide.
Nationwide.
Yes, ma'am.
So people back east can use it, Nevada can use it. All right. So did you want to talk about these forms at all that we had sent out?
I mean, I guess we could briefly cover them, right? So the first two, and I'll kind of spend a little bit more time on these. The first two forms, this is a DD-214, right? So the DD-214 is a beautiful form because when we get out of the military, we put our face against this form and we kind of caress it a little bit and we put it up against our chest, and you might even see one lone teardrop come down our eye because it means that we're going home. It means that we're free, right? And so the reason why this form is so important is because it outlines the service of the service member, right? So what we're looking for on this form, team, is simply this. As the lender on box 24, that the veteran has been honorably discharged from the military, okay? So that's just basically saying you are now honorably discharged from the military. So I, as the lender, am going to be able to, or requesting this from the veteran, okay? Now, the next form is the certificate of eligibility. Now, here's what happens with this form, guys. The veteran requests it, they get it back, and they go, holy smokes, $36,000. If you guys see where it says right there in the middle, the veteran's basic entitlement is only $36,000. They go, holy smokes, $36,000. I can't qualify for a double wide in Tonopah for that, right? Well, hold on, guys. All right, $36,000 is the basic entitlement. That is not the loan amount. So you remember we talked about earlier, the VA guarantees the loan or insures the loan. It's a fancy way of saying insurance. So $36,000 is the basic entitlement, and then every veteran gets an additional what's called bonus entitlement, $68,250. Remember, entitlement's fancy way of saying insurance. $36,000 worth of basic, $68,250 worth of bonus. The two of those together equal, you guys ready? $104,250. That's the maximum amount that the VA will guarantee on a loan, making the veteran eligible for up to a $417,000 loan in Maricopa County. Now here's the deal though, team. Just because a veteran has this information does not mean, say does not mean that you want to get them in your car, right? Because a veteran, and here's my point, can be eligible for a VA loan, but that does not mean that they are pre-qualified for a VA loan. Big difference. So these are the two forms that every veteran must have in conjunction with the VA loan, regardless of active duty, regardless of purchasing a home or even refinancing. Okay? Hope that answers that.
Can you say that again?
Yep. These two forms are like peanut butter and jelly. They go together. All right? Every veteran must have these two forms in conjunction with the VA loan. They must be required. Now, the reason why it's so important to make sure that you're working with a mortgage originator who understands VA loans is because these need to get pulled up front, right? Do not be the agent that doesn't let the veteran get these two forms up front, and then guess what you're doing? When they find out they don't have it, you're requesting an addendum to extend the close of escrow by however many days you need to because you couldn't get a copy of these. Here's the next question. Jimmy, what happens if my veteran loses this? Well, that's a very good question. For the DD-214, they can go to archives.gov, and they can request their military records there. For the certificate of eligibility, this form's a little bit easier to get. They can go to their e-benefits page. They can go to their mortgage lender, somebody like myself, or they can even request from va.gov. Okay? I hope that answers that.
Thank you.
Yeah.
One of the questions that was asked, are all veterans eligible for the VA loan? And how long do they have to serve to be eligible?
Very good question. So in order to use a VA loan, you must have been honorably discharged, okay? Active duty service members, you must have served a minimum of basically around 90 days, and you're eligible for the VA loan. Now, there are some exceptions to this. The exceptions are if a veteran was maybe medically discharged. There's a lot of our vets that have gone overseas, received or, had some sort of injury and they had to get out medically. Well, they would be eligible for a VA loan, okay? In addition to that, perhaps a reservist. Oh, here's something that's important, Callie. Reservists, okay? Reservists must have served 6 years in order to get their VA loan benefit, not 4 years like most veterans, okay? So there are some exceptions to this rule, however. If a reservist has served 90 days in a wartime environment, they will be eligible for their VA home loan benefit, maybe not having to wait the full 6 years. Okay, so once again, just to kind of wrap it all together, typically the veteran has served a minimum of 4 years. They may be eligible to obtain a VA loan with less time than that. Just simply depends, and that's exactly why we request these documents up front from the veteran to ensure that they are eligible for their VA loan financing before they go out shopping for a home.
How long does it usually take to get these documents back?
Well, for the DD-214, if you don't have that, it could take up to 2 weeks sometimes. Now, we're getting that from the government itself, okay? The certificate of eligibility, can sometimes be instantly, or if you can't, you have to order it back from the Regional Loan Center in Atlanta, and it just depends on their turn times. VA is very busy right now, so that could take up to 5 to 7 days. Once again, it's important to get these documents up front, which the lender should be doing during the pre-qualification process.
Okay, so it kind of piggybacks with that very first question.
Are you a veteran?
Are you a veteran?
Mm-hmm.
And then the second question could be, do you have your paperwork?
Right. And so here's my hope here at the end of this call. Everybody's going to say, all right, are you a veteran? And now you get to start talking like a military, right? The military man or woman, you say, all right, here's what I need you to do. I need you to get a copy of your DD-214, and then I need you to get a copy of your COE, and then from there we're going to start putting some rounds down range together. Good to go? And then all of a sudden, when you start talking like that, they're going to look back at you and go, wow, I kind of like this. This person's speaking my language here. This is good to go. And they're going to go out there and obviously use you as their trusted realtor and advisor moving forward into the future.
That works good. Now let's talk about all the information you've given today is Arizona specific. It's not Maricopa County specific, the 104-250. This is Arizona. So it's all the counties wrapped together.
That's right. That's right. All counties wrapped together. Now, just briefly on that, you know, you may hear otherwise from other lenders, right? Other lenders may tell you different things about that. But here's what I'm here today to tell you is that these are the true guidelines of the Department of Veterans Affairs. And if that other lender may have what's called lender overlays, they may have their own restrictions on some of these things. For example, some lenders require a 580 credit score in conjunction with a VA loan, right? Other lenders require a 640 in conjunction with a VA loan. So let me ask you guys a question. Could a veteran get a VA loan denied one place and be able to get it done somewhere else? And the answer is absolutely yes. So just because one veteran says, or excuse me, one lender says no to a VA loan does not mean that you can't get it done somewhere else.
Sounds like one of those instances where having a really good mortgage partner could make a $50,000 difference.
Amen to that.
Okay, so we've talked about VA loans on existing homes or, what about with new builds or new construction? Any requirements there? I mean, what about...
Define new build. Are we talking like a new community in the neighborhood, or are we talking about like building a home?
Let's talk about new construction home, including new construction financing.
Yeah. So my definition of new construction, and please tell me if yours is not the same, but the way I'm thinking is you have a piece of land and that you would like to build a new home on that land. Okay, and so if that's what you're thinking, the answer is from the VA, yes, it can be done. However, that's an interesting word, right? Because that's where the adventure begins. However, you won't find any lenders that will do it. Okay, so this is one of these situations where the VA says it will do it, but lenders are very reluctant to offer a VA loan, what we would call construction to perm financing. All right, so just because the VA says they'll do something does not mean that the lender will do it. And the reason behind that is because, once again, the lender has something called lender overlays where they slap their own guidelines on top of that. But if you're talking about going to Beazer Homes or, Fulton Homes or something like that, the veteran can absolutely get a VA loan in some sort of new home build community.
Excellent. Okay, so let's go back to the appraisers for a minute.
Yep.
Is there some kind of list of approved VA appraisers? Any appraiser perform an appraisal on a VA loan?
No. So what happens is when the lender orders the appraisal, what happens is the VA randomly assigns an appraiser to go out and inspect that property. Okay, so not anybody can just do it. It's randomly assigned through a lottery system through the Department of Veterans Affairs. Okay. So to get that list, I don't know where you could obtain a copy of that, but I will give you a phone number. The VA 627-3050. So that's 602-627-3050. And that phone number is the VA construction and evaluation department, they're the ones that basically oversee the appraisal process. So if you're looking for that list, that would be a good number to call and start and find out a little bit more about that. But I don't know if there's a specific list. If there is one, I'm not familiar with it, but that number should be able to help you out with it.
Great, thank you. Let's see.
Lots of questions. I like it.
There's a ton of questions. Let's talk again about what you said about a reasonable amount of time. So you have the veteran, they're living in a home, they want to buy another home, their family has grown, and you mentioned a reasonable amount of time.
Yeah, good question. So I get this question all the time. It's about 1 year. I mean, if you're going to buy a home, live in it for about 1 year, and you can document that things have changed, right? Maybe you got that promotion at work, or perhaps you can show that you've had a couple of kids. Well, that would be tough to do in a 1 year time, but you know what I mean, right? If you can just document it and it makes sense, and you're going from a $120,000 home to an upgrade, that makes sense to an underwriter. What this scenario is not designed for is the guy that buys his house on 123 TBD Street for $300,000, and then after that, 3 months later, wants to buy the home for the 1,200 square foot home 3 doors down. That's a short sale, right? I mean, it just doesn't pass the make sense test to an underwriter. It's got investment property written all over it. And if I may, one other thing regarding investment properties. Did you know that the VA allows up to a 4-unit property to be purchased with a VA loan? Isn't that
Really?
cool? Yeah. So the VA, the veteran has to live in one of the units, okay, but they can buy up to a 4-unit property. They live in one of the units. Now all of a sudden they've got a 4-plex or a triplex or a duplex. I mean, team, the opportunities with VA loans, once again, are limitless. And if you're serious about serving this community, and maybe here's a little shameless plug for AAR or just NAR in general, is I teach the MRP, the Military Relocation Professional Certification. And what's really neat about this certification is that it never expires. All right, so you can get certified to teach, to serve veterans in active duty military, and this is offered through the various associations in the Valley, and then you can come out and spend a full day with me, right? What's better than that? And get certified at the same time. It's called MRP, the Military Relocation Professional Certification. It's a certification through NAR, and once again, never expires, and you can learn more about that on the various association websites.
Excellent. Thank you. So let's talk about just a moment about the 104,250 number versus the 417 number.
Right.
Is there a particular reason that you would focus more on the 104,250 when talking with a client instead of the 417?
Nope. You're really not going to focus at all on the 104,250. Right. I'm, for the sake of just explaining how VA loans work, team, I'm just showing you that that's the maximum amount that the VA will guarantee. Okay, it's as simple as that. The 417 is basically their eligibility for a VA loan. Every veteran in Maricopa County can purchase a home up to $417,000 with no money down. There is not another type of loan that will allow that. FHA requires 3.5%. Conventional is anywhere from 3 to 5%, both of which require PMI. So that's what I would focus on. And in addition to that, I would obviously just, confirm or reassure them that, hey, you still have to qualify for it. You still have to qualify for it, but it is your eligibility or entitlement.
Excellent. Okay, so let's talk about the purchase contract for a minute.
Sure.
You were talking about allowables and the origination point. So the question would be, what's your opinion about just leaving line 83 blank in case the buyer were willing to pay for the unallowables?
We do it all the time.
Okay.
We do it all the time. And so the way your purchase contract reads right now is that the seller, or I should say the escrow fee, is built into that contract. So, I mean, technically, if I were an agent, which I'm not, but the way I would read or interpret that, which means nothing, but just, again, the way that I would interpret it as a buyer would be that the seller has to pay for my escrow fee on a VA loan, because it's built into the contract. In the event of a VA loan, seller agrees to pay escrow and blank, right? So Having said that, unless the seller mentions otherwise and maybe Section 8 of the contract says we're not going to pay the escrow, I would say you can absolutely leave that line blank. We do it all of the time, and the way the contract reads is that they're at least going to pick up the cost of the escrow charge.
Excellent. Okay, so the next question, it's actually a very excellent question, Paula, and thank you for asking this. We talked about Arizona being one of those states that allows the buyer to pay for the pest control, the termite.
Right.
So the buyer pays for the fee for the inspections, but who's responsible for remediation?
Great question. It depends, right? It's going to go through your Benzer or whatever, that looks like. So to put it to you like this, Paul, the buyer can pay for it, or the veteran can pay for the remediation and the repairs if need be, right? Obviously, we would want to try and get the seller to pay for it, but in the event that they won't, or however that looks, or whatever that looks like, the buyer can pay for it. Now, I want you guys to know something, because I see a lot of realtors get tripped up on this, and a lot of lenders do a lousy job of educating real estate agents on this. Just because you don't have termites on a VA loan does not mean that you are in the clear. Here's why. We all are probably familiar with pest inspections, right? We know that pest inspections oftentimes have things called conducive conditions. Conducive conditions mean items that are conducive to infestation. What are conducive conditions? Excessive moisture, wood to earth contact, faulty grade, these types of things. So your lender or the mortgage loan officer or their closing department is going to request that those need to be remedied. So having no termites is not enough. And what we don't want to happen here is be the agent that gets a phone call on the day of closing that says, hey, you have a faulty grade or excessive moisture or wood to earth contact, and now all of a sudden you're frantically dialing your handyman to meet you out at the listing when you've got a funding in 30 minutes and you're having to get this updated termite or pest inspection report, and you're just trying to get their keys that day, and it's just unwanted noise. So just be prepared for that in the future, that if you see any conducive conditions, they always need to be remedied. Not just having termites is simply not enough.
Excellent. Okay. And then Gunnar is asking for just a little bit of clarification that on how a veteran may pay for his loan costs. If a veteran is charged a loan origination point, what happens?
Yeah, so if the vet is charged in what was the gentleman's name? Gunnar. Hey, Gunnar. If the veteran is paying a loan origination point, then they can't pay for those customary non-allowables. Non-allowables are things like processing, application, underwriting, doc prep, these types of things. Okay, but if they are not paying a loan origination, then they can, because the veteran is not being double charged. Now, let me tell you a little secret about the loan origination point. It's kind of an extinct fee. Not a lot of lenders will charge it anymore. In my experience, what I see with the loan origination is some of the bigger lending institutions on a national level will charge loan origination points. But your local lenders, again, I don't think that you're going to see that loan origination point anymore. So that being said, once again, you can write that full price offer and not ask the seller to pay for any of the costs in conjunction with the loan.
Okay, excellent. Thank you. All right, this is a yes or no answer.
I'm already married.
Okay. That's not a yes or no.
Yeah, that's true, yeah.
Okay, so if a vet uses $50,000 of their 104,250 on their first loan, but then they sell that home years later and pay off the loan, is the $50,000 returned to the eligible amount on another loan in the future?
Yes.
Thank you. Excellent. Good answer, good answer. And let's see. Oh, I like this question. Deborah, thank you very much for asking this question. What about a recent widow whose husband was a vet? They used a VA loan on the home. Can she refinance the VA loan even though her husband is deceased?
It's a complicated question, and the answer is maybe. Okay? What has to happen there is, in order for, well, let me just back up for a second. the spouse of a veteran, the unmarried surviving spouse of a veteran, may be entitled to use their husband or wife's VA loan benefits. The cause of death, however, must have been service-related. So veteran or, active duty service member goes to Iraq, killed in action, something along those lines, the spouse would be eligible for the VA loan benefit. Another common scenario that I've seen or speak to is Vietnam veteran exposed to Agent Orange, develops prostate cancer. They link the two, and you see in his record book that he has cancer because of this Agent Orange exposure, passes away. His spouse could use the VA loan. In your particular scenario, it's a little different. You already have a VA loan. Your loan is on it right now. So what I would say is that there is a possibility that it could be done. It would need to be decisioned by the Department of Veterans Affairs in conjunction with the lender. So it's a case-by-case basis. It's a little bit more complex than just saying yes or no over the phone. Okay? So I hope that helps.
Thank you. Okay, so the next question is it a myth that a client who is a vet can get a VA loan when he's had a foreclosure, or what about when he's had a short sale?
It is absolutely a myth. So can we
Yep.
just go back a few slides here really quick?
Of course. What myth do you want to go to?
Let's go to the veteran can only have a VA loan, one VA loan at a time. There it is right there.
This one?
So it's absolutely a myth. A veteran can obtain a VA loan in as little as 2 years after a foreclosure. You guys ready for this? As little as 1 year after a short sale. If you read through the VA lender's handbook, there is no verbiage on short sales in VA. So it's up to the lender to make a prudent decision on whether or not the veteran is eligible. So I've seen veterans get into VA loans in as little as 1 year after a short sale. For bankruptcy or foreclosures, 2 years. Okay, that's the VA lender's handbook. It states 2 years. Okay, there are some exceptions to that. If you can show that the cause of the foreclosure was beyond the veteran's control, they may be able to get it sooner. But let's just say 2 years. Now, what if the veteran had a foreclosure on a VA loan? Could they use a VA loan again? And the answer is yes. Do you remember the scenario that I gave you right here where I said it's a $120,000 purchase where, the veteran wants to go buy a new home, more desirable location, bigger square footage, etc.? Well, what if I foreclosed on a VA loan? Well, watch what happens here. I had a $120,000 mortgage. I foreclosed on it. The VA now sent a check for $30,000 to the mortgage lender. I lost that entitlement. So now if I subtract out that that $30,000 from that $104,250, I still have remaining entitlement. So therefore, once again, we do the exact same calculation. $74,250 times 4, and that means that I could get a new VA loan up to $297,000 after foreclosing on a VA loan. Isn't that cool? So just because a veteran had a foreclosure or on a VA loan doesn't mean that they can't use another VA loan again in the future.
And let's just have a definition, just check real quick. When you say reservist, does that include the National Guardists?
Yeah, great question. Yes, it does. So National Guardsmen are definitely considered a reservist and must have served 6 years, hello, 6 years of service. Now, a lot of our men and women here at the Army Reserve Unit on 52nd Street, McDowell, a lot of these men and women have done multiple deployments to Iraq or Afghanistan. Okay, so oftentimes they'll be eligible earlier for their VA home loan benefits, just a heads up on that. And a lot of them live in the Southeast Valley, and there's a big time opportunity to serve these great men and women.
Excellent. Let's talk just real briefly about, does the vet have to have served during wartime?
No, they do not. It could be peacetime, absolutely, as long as they served 181 days during peacetime.
Okay, and who is responsible to pay the appraisal fee when that is paid up front?
The veteran.
And can a VA loan be used for an currently active military member?
It most certainly can, absolutely. Now, can I give another quick marketing opportunity there? So you serve the Northwest Valley, right? Veteran walks into your house on a week, or active duty service member walks into one of your open houses on a weekend and says, hey, I'd really like to buy another home, but my house is tied up on a VA loan back in, Fort Sill, Oklahoma, or military base or Laughlin Air Force Base in San Antonio or something like that. Once again, we can use that VA bonus entitlement or that second VA loan to help them with a second purchase and use their VA loan. Okay, so same thing there with active duty service members can have more than one VA loan at a time, and oftentimes they'll buy a home here in Phoenix or a Luke Air Force Base and then a home somewhere else. And so it's not uncommon for them to have two VA loans in two different houses at the same time.
Excellent. Okay, so last question to wrap it up.
Okay.
I'll probably give you another one after this because I usually say last and then offer a bonus.
Perfect.
You working with the vet, my apologies, and they've requested the DD-214 and the cert of eligibility, and doggone it, the VA is just backed up and taking forever. Anything you can do to expedite it to move a little faster?
Well, the answer is yes. And so for the DD-214, there are services, and I do not endorse any of them. I'm simply sharing with you my knowledge on it because I've never tried it. But I am familiar with expedited DD-214 services where you can pay like $100 online or something like that, and they'll send it to you in a matter of 24 to 48 hours. So I've seen and I've heard about that. And then for the certificate of eligibility, that's kind of like, as we used to say in the Marine Corps, it's a hurry up and wait process. Okay? Now, it pays to be working with mortgage originators that have contacts at the Department of Veterans Affairs, and if you have a mortgage originator that does have contacts at the Department of Veterans Affairs, perhaps they can pick up the phone and ask for a favor. So that's always a beautiful thing. So if you don't have that, then you're at the mercy of the VA and waiting for that form to come in. But to your point, Callie, this is always documentation that we want to get during the pre-qualification phase, not later, because a lot of lenders simply don't know to ask for this information. The example that I like to give, and I know we're closing up and I'll make it brief, is if you take the Marine Corps, the world's most elite fighting force. Yes, I have a biased opinion, right? But if you take the Marine Corps, within the Marine Corps, we have different jobs, okay? You've got guys like me, the grunts. We shoot guns all day, and we go out to the field and we practice on different types of maneuvers. And then you've got guys like the air wing, right? What do those guys do? They work on electrical equipment on aircraft, avionics guys. Well, here's the deal. You certainly don't want me touching avionics stuff because I don't know what I'm doing. And you certainly don't want the avionics guy shooting a Mark 19, a 240 Golf, an M249 SWAT automatic weapon. Why? Because they haven't had the training on it, and they don't know what in the world that they're doing, right? So just like the mortgage business, just because we're all mortgage originators does not mean that you want to trust or allow your client to work with that mortgage lender because they may have never trained on a VA loan, and that can end up costing both you and your clients a lot of money in that escrow process.
So, excellent point. So the best way to reach you, do you prefer them to pick up the phone and call you or email you?
Email or pick up the phone, whatever is most convenient. Again, you can email me at jimmy@valoans4vets.com, or you could always call me at 480-351-5904, and I'd be happy to be a resource in any way that I can.
And the app is available where?
Yep, the app is available at the App Store for iTunes, the iTunes App Store, and then as well as Android's App Store as well. Or for more information about the app, you can go to the VALoanApp.com. That's the VALoanApp.com. And one last thing here, if you want more information regarding VA loan benefits, you could always go to my website, VALoans4vets.com. That's VALoans4vets.com. I also have a YouTube page where I talk a lot about these videos, or excuse me, I talk a lot about the things that we discussed today through various 2 to 3 minute videos on the VA appraisal process, closing costs, having more than one VA loan at a time. And then in addition to that, and the last thing, I have a Facebook page designed with you, the realtor, in mind, that you can share those things on your timeline to educate veterans and active duty military. And that too is VALoans4vets.com, VALoans4vets.com. Type that in the subject bar, hit like on the page, and you'll be able to share a lot of this information with veterans on your timeline that are scrolling up and down and that are hungry for this information.
Excellent. So Jimmy, just to recap kind of the top 3 things that I've heard you say today. Are you a veteran?
Yes.
First and foremost, that's the question to ask.
Absolutely.
A mortgage partner who understands VA loans.
Yes.
Having someone who's in the top 1%, definitely a plus.
I would think so.
And then the VA loans, they are different from lender to lender.
Right.
So the credit score can change, the eligibility can change.
That's right.
So definitely, again, having a mortgage lender who understands the nuances
Correct.
can save thousands of dollars.
It most certainly can.
Absolutely.
It most certainly can.
And then the third one that I heard is download the app.
Download the app. Absolutely. Absolutely. So, you're hanging out with a veteran at a party, you get a veteran in your car, literally it's a few simple questions, and it's just designed to educate the veteran on if they're eligible for their VA loan benefit, and you provided them that valuable information, and from there they can take advantage of one of the best, most competitive loans available on the marketplace that they've defended their great country for, that they earn, that they deserve, and that they're entitled to.
Okay, well, thank you so much for joining us today.
Yeah.
Any closing remarks?
No, that's it. Thank you, everybody, for having me. I hope you found the information to be of value. And once again, if I can be a resource for you in the future, please don't hesitate to give me a call, and we can go from there. Thank you again.
Thank you very much, Jimmy. Thank you, everyone, for joining us today. And for all of these awesome feedback and remarks, I will definitely be sharing them with Jimmy. Please reach out to him directly with your questions. I hope you have a wonderful weekend. Thank you so much for joining us, and have a great day.